through how bad the liquidity situation is then for the Greek banks? Of course, they're on life support, aren't they, at the moment? They're being protected.
Yeah, they're on frozen life support. The ELA, 89 billion euros. It's bad. They are going to run out of cash within days, but behind all of the negotiations, what needs to happen is some cash needs to be released to the banks. Because, frankly, in a week's time, if the liquidity hasn't been improved, I mean, the capital controls will continue. They continue for 2 years in Cyprus, but liquidity then becomes solvency. And we can talk about all the bad debt. There's 85 billion of bad debt. There's only 25 billion of capital. That is a problem you can solve 6, 12 months down the line. You cannot avoid addressing the liquidity issue right now. So it is bad, and it's up to the ECB, really. I mean, unfortunately, we can wait to the 20th, see if they honour the payment, but the banks may not be there properly by the 20th either. So the liquidity of the banks is the most pressing thing.
So we will hear something from the ECB in the coming days, you think, then? Next couple of days?
Well, I don't really see how they can't, at the very least, talk about sort of short-term, whether it's the Eurogroup, the 10 billion they're talking about, backing guarantees to provide some more cash to the banks. But something needs to give, definitely.
See, it's interesting. We talk about the ECB, and the ECB certainly is going to provide short-term liquidity via the ELA. However, there is a bigger story here, and that is convincing depositors that they should, A, stop taking their money out as aggressively as they are, or possibly even return money into the banking system. And that requires a degree of trust, which at the moment feels like it's very much absent at the moment. How do you solve that one? How do you make the Greek people be convinced that their banking system is sound and solid and it's worth putting money back in the banks?
Well, one of the first things you do is you restructure the banks. I mean, they've got to create a bad bank. We know that. There is no real choice.
Yep.
So if you think that your deposits, like Northern Rock, what they did with Northern Rock, good bank, bad bank, you'll be more comfortable with the money and what you perceive to be a good bank, particularly, say, when you strip out the bad debt. I mean, one of the issues is, of course, the ELA is costing them a lot of money. I mean, the ECB, on the one hand, is giving hundreds of billions of targeted long-term operations to Eurozone banks at 5 basis points. The ELA is costing 155 basis points. You look at the last quarter, all the Greek banks, one thing they were saying is it's really eroding our margins.
Particularly after the recent haircuts.
Exactly, and it's gone to 89 billion. I mean, it's a big part of it. It's 50% more than their retail deposit base. So structurally, that is the key issue to address. But short-term, they just need cash. They can go on talking about a bad bank, talking about how they restructure, but cash, very near-term. Capital controls, I think, will stay, but it's about cash liquidity for the banks.
Jonathan, thank you. Jonathan Tyce with the banking angle. Let's talk about shipping a little bit. Tony Foster has joined us from Marine Capital. Tony, how does the shipping sector come out of this Greek crisis? How touched by it has the shipping sector been, or how far has it managed to stand apart from it?
It largely stands apart, and it's mostly paper talk as far as the effect on the sector is concerned. The shipping industry is clearly global, and whilst Greek ship owners represent a significant part of that global marketplace, it is truly global and international and, as it were, permanently external. Yep. So the pieces that belong to Greece tend to be the nuts and bolts pieces, the operational pieces.
Yeah, they have marketing, they have operations, they have etc. How much of is that being affected by what Jonathan's just been talking about, which is the inability to move money in and out of the country, the inability to access the bank accounts?
Yeah, that is an issue for operational control in companies which are run to that extent out of Greece. And they will have to make alternative arrangements because you have constant cash requirements, constant money in and out, daily basis. So that needs to be addressed, and they can do that through, for example, if you're RBS, you can run it out of the London office.
As we know, the Greek shipping sector is protected to some extent by the Constitution, isn't it, the amount that it can be taxed? Mm-hmm. Is that going to remain the case, do you think?
This is, again, a bit of a red herring because ships trade internationally and they don't live anywhere, so the income from ships is effectively not taxable. You can introduce a certain taxation onshore because you take part in a certain regime, but the ability to increase that tax exponentially doesn't exist. The Greeks would just move if whatever regime they were in.
But those individuals have to live somewhere. Is that the source of more revenue?
The issue, I think, that the European government is trying to get to is the taxation of the individual ship owner, his personal account. But like every, billionaire, he has a few choices.
Including a few boats.
Yeah.
And a few boats.
Get on a boat.
And a few
where would they
boats.
go?
Switzerland.
London, would Cyprus, would
Cyprus.
When you look at the risks surrounding all of those different options, what are they? You're making a big choice. You want to up sticks and you want to move out of Greece. If that's the threat that exists.
Yeah.
You go to Cyprus. This is a country that's had capital controls as well. Is the risk there that you end up out of the frying pan into the fire? What are the risks of going to the other countries as well?
Well, if you're talking about the ship owner himself, like I said, he's the billionaire that can more
What
or less...
about operationally?
Operationally, I think that the issue there is that there are much more people involved.
Yeah.
So if you're a ship owner with 50 ships and an operation in Piraeus with 200 people, that's quite difficult to move.
Right.
So Cyprus would be better for them than London, for example.
The threat is, so when they talk about the threat of leaving, it's actually, the barrier is actually a little higher than maybe first suggested. Yeah, we just sail the ship out of Piraeus.
Much higher.
Right.
The people that might leave are the individual ship owners themselves, effectively. And the structure that might leave is the registered ownership of the assets, which this is the thing that pays the nominal tax, the ship itself.
And how is the tax regime in Greece with regards to shipping different or the same as other parts of the world that rely on shipping as
it's
a
parallel.
source?
It's pretty much parallel. We have something very similar in the UK. Throughout Europe, there are regimes which parallel what they call tonnage tax in Greece.